Eveready Industries, lots of talk in the market that perhaps they're wrapping up their battery business, looking at a demerger. There are parties vying for the Eveready brand, and will FMCG then be the new big growth driver for Eveready? So to answer all these questions, we've got on board with us Amritanshu Khaitan, the MD at Eveready Industries India, joining in. Amritanshu, hi, morning. Let's first get done with the with the usual rigmarole and talk about your earnings firstly, because if I look at the Q3 performance, the top line growth has been disappointing. That continues. Lighting, which has seen good growth at a pace for so long, has also been faltering. What really is the reason behind this kind of a performance, you would say?
Good morning, Aisha. I think the Q3 numbers have to be dissected category-wise. For us, the battery category and the flashlight category has had very solid performance in the quarter. The battery category, after many quarters, has had a volume growth of close to 7%. And EBITDA margins have come in at the highest level of 18% for the category. Flashlights too have come in with an EBITDA margin of 13%. And if you take 9 months, batteries has clocked 17% EBITDA margins. The lighting category has been disturbed this year. On the top line front, we've had supply disruptions due to one vendor packing up, and we are trying to get 2-3 new vendors to come in. All this does take time, which impacted sales. Also, there's been competitive pressures on the LED bulb front, which has brought prices down. These are the two reasons why revenue has actually declined by 11%. Regarding the EBITDA in lighting, it has come in at 5%, but there's a 3% additional expense at EBITDA level due to the company foraying into professional lighting as a segment, which is half the industry where Eveready was not present. So we are at the position of hiring people to set this up. We got one of our first orders where we've actually lit up 1/3 of the whole Kumbh Mela in Uttar Pradesh, and got a value order of about 5-6 crores. So this is early days for the professional lighting piece. As we scale this up, margins in lighting should actually improve substantially from where it is. Coming to appliance, which is another investment category for the company, we've seen very strong growth, where we've clocked a revenue of 41 crores for the quarter, and we are on track to achieving 140 to 150 crores for the full year. Also, I would like to highlight that fourth quarter last year was an operating loss quarter, where a lot of our expenses got bunched up. That is not the case in the current year. So if I look at the full year, we are still on track to achieve a 25 to 30% growth at EBITDA level, which would show positively on the bottom line.
So Amritanshu, we got a sense on numbers. Now let's get a sense on where the company is headed. Now, there is no smoke without fire. There is a buzz that the promoters are looking at monetizing their stake either in Eveready or in the battery business. Can we dismiss it off? Can we rule it off? Or there is a consideration?
Nikunj, we as a company always are looking at opportunities where we can enhance shareholder value, stakeholder value. And so the company is always looking at options for joint ventures and strategic partnerships. As and when anything material does develop, we will duly inform the stock exchange and the investor community at large.
Agreeing to the fact that you would be open to selling the battery business, right? Is that something that we can take on record?
Aisha, as I mentioned, anything material which does get developed, we will duly inform the stock exchanges. At the moment, the company in its routine business always explores opportunities to enhance value for its shareholders in terms of business opportunities, like how you mentioned, strategic or discussions can always keep happening. That is something which, till something material doesn't happen, we can't conclude on this.
Fair enough, Amritanshu. We won't probe little more, but do understand that, of course, it's curiosity and, of course, our jobs. Investors want to know a little bit more about that. But let's talk about the flagship battery business, because that has been having a tough time. There has been some recovery there in volumes, but the question is this growth sustainable? And can you tell us what has exactly been the turnover?
The battery business has seen a 7% growth in turnover. That has come after many quarters of flat volumes due to dumping taking place of cheap Chinese batteries. The government was supposed to make Bureau of Indian Standards mandatory in October. We assume that imports have reduced in anticipation of this BI standard becoming mandatory, but that's got delayed to 1st April. It is still early days, but I personally believe the per capita consumption of batteries is the lowest in India, and with curbs being taken place to reduce poor quality batteries being imported, you should look at a much better growth and a much better year ahead for the battery segment. And also to add, the margins have been at its highest.
Okay, fair point. We noted that margins have really gone exponential. Growth in the battery business is coming back. But Amritanshu, Eveready is not just a battery company. There is the LED business. You moved into the confectionery business. You moved into the appliance business. In 3 years from now, how much of your turnover will be coming from the non-battery business, and what growth do you think there would be visible, and how much of a non-battery business will start making serious money for you?
Nikunj, the lighting category and the appliance category together should be close to over 1,000 to 1,500 crores of revenue in the next 3 years, just because of the sheer size of the industry. And once we get economies of scale in these segments, I think the company can make an EBITDA margin of around 10% in these segments. Regarding FMCG, we are at a nascent stage where we are test marketing the confectionery category. Our joint venture with the Wings Group is also ready to now start moving, and we should have some new products coming out in the next 3 to 4 months through the JV.
Okay, so Amritanshu, I have to go back to that deal buzz and pardon my curiosity. When you said that you're looking at enhancing shareholder value, what do you mean by enhancing shareholder value? The Eveready is a zero debt company. Why would you be looking at selling stake there?
Nikunj, as I mentioned, if and when any strategic action takes place or any material development takes place, I would be able to comment on that. At the moment, it's very speculative, so I can't give any more details.
Amritanshu, thank you for joining us. I guess the important takeaway from that interaction is that battery business has made a comeback, and that is something which has happened after a really long gap for Eveready. So Amritanshu, appreciate your time and glad you could join us.